Hi, thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar, headline news, or geopolitical, sometimes a combination. But it gets really confusing sometimes for people when the market sentiment changes and now good news is bad news and vice versa. Well, we try to give that information out to you so that way it lets you know as to what's going on, why it's happening, and where to go from there. And hopefully this will give you the information you're seeking. A little bit about myself is I am a loan officer. I do work with a national lender. We lend in all 50 states, so if we can be of any service to you, whether it's a purchase or refinance, please reach out. We'd love to be able to talk to you. Got a lot of great loan programs available and great rates. But more important than that, we want it to be a good resource for you folks. So if you guys got questions about anything, again, please feel free to reach out. We'd love to be able to help you out with what you help you with your needs. So without further ado, we'll jump right into the economic calendar for the day. We got a few items here. We got the Philly Fed index for the month of May. This is kind of measures the uh, manufacturing around the Philadelphia region. So it went from 17.6 in the month of April with a forecast of a slight dip to 16, and it dramatically dropped down to 2.6. Now, we've been kind of seeing this around, and this is affecting the markets a bit as well. So we'll kind of touch on that a little bit later on. But now we'll start with the weekly jobless claims that we get. So last week's number got revised slightly lower, which is obviously good news. We want fewer people applying for unemployment. So it went from 203,000 to 197,000. Forecast is supposed to show a tick to 200,000, but it came in a little bit hotter at 218,000. However, if you look at the continuing claims, we are still seeing that trend downwards, which is obviously good news. We want to see more people getting off welfare, getting off the not welfare, but the jobless claims. And then we also got existing home sales, which we saw drop a bit too. Went from 5.77 revision in March to 5.75. Forecast calling for 5.65, and it dropped a little bit lower down to 5.61%. So that comes to a 2.4% drop in existing home sales. And of course, a lot of that is attributed to the lack of inventory we have. So we still have extremely low inventory, but also we are getting to a point where, with the increased costs, with the mortgage rates going up, and then home prices where they are, affordability is much lower as well. Last but not least, we got the leading index. This kind of gives us a short-term range of economy ahead of approximately about 6 months. The previous report back in March, it dropped 2.7%, but that got revised even further to a drop of 3%. And then in April, it continued that trend of a drop to 2.4%. Now, what we got today is stocks are a little mixed today. Dow is down. It took a huge beating, closing down 1,100 points yesterday. It's continuing that trend a bit today. The other two indexes are more or less in the positive territory. So maybe they stop their bleeding or not. We'll determine. It's kind of the same thing as yesterday. When we saw Target missed its earnings, we're also seeing that consumers are really starting to watch what they spend, where they spend the money. We did see money increase by approximately 20% in bars and restaurants. However, stores, their profit margins are shrinking, and I think they're looking at that overall for across the board in terms of what's happening with the corporate earnings reports, that corporate profit margins are shrinking due to inflation that's out there. So we're seeing investors being reminded of that, so they have been pulling money out. It has been free flowing into the mortgage-backed security, which is helping mortgage rates today. I'm going to touch on something with mortgage rates, which I find kind of interesting with what we see today on the chart. But again, that's they are concerned about where things are going. That consumers are getting to a point where they're looking at what they're with the retail sales, things like TVs and stuff like that. They're looking at what they are not really on furniture, so not buying as much as they were before. So they are kind of cutting back on their discretionary funds, so to speak. Now, let's go ahead and take a look at the mortgage-backed securities. What we're doing today, we're up currently about 30 basis points. It does translate to better pricing, but look where we're at. Here's the 25-day moving average. I want to go over a year because It's been since like approximately was it August? Or I'm sorry, October of last year, since when we crossed over below the 25-day moving average, and since then we've been below it the whole time, and we have not even really given much of a challenge to the 25-day moving average. But now maybe we have, so maybe we have found our floor, and maybe we're working uh, floor. Maybe we found our floor. So look at that; it's a huge drop from 107 all the way down to 90. 98, 99 range. That's over 9 points in that since that time, since last October, where we were and where rates were. So with it being up here, this is why rates are so low, and see how much of a drop we've had since then. Um, but again, this 25-day moving average, this is the first time I've seen it since October, approximately October, when we dipped underneath it, and then we've been underneath it ever since then. Here's today's volatility. As you saw, about the 8:30 time frame when things were being released, we jumped upwards, but we did have a slight. No, I'm sorry. It was just before that. It dropped down, and then we came back upwards again. We've been kind of going between these ranges here now since then. But back to the 1 month, we are looking much better. Again, we're up above the 25-day moving average. We'll wait and see if that becomes a trend, but that's positive news for mortgage rates. Maybe we might see some improvement in mortgage rates. And if we do get some improvement, how much is hard to be determined, but any little help would be obviously greatly appreciated. Meanwhile, 10-year Treasury dropped below its 25-day moving average and moving towards the the 50-day moving average, and it's not quite there yet. It's in between the 25 and 50-day, and it's sitting just under 2.85 now, which is again adding less pressure onto mortgage-backed securities. Now, lastly, we'll touch on is the average rate for conforming limits. These do have points built into them, and they do lag approximately by a day here. The 30-day is now 30 years now at 5.44%, and the 15 years at about 4.85% right now. So if you'd like to rate quote, please feel free to reach out. We'll be more than happy to accommodate. And if you guys got any questions, please reach out. We're pretty much wrapping this up. We certainly appreciate you folks, and if you guys like these videos, help us out and smash that like button and share. We greatly, again, appreciate all your assistance. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Tomorrow will be actually a pretty slow day because there is no economic data, so it'll be pretty much off the headline news or geopolitical news that will take shape tomorrow. But as for data being released, there's nothing for tomorrow. All right, have a great rest of your day. Thanks for watching. Bye-bye.